Well, good morning, Bob.
Good morning, Bill.
Today we are talking about, it's summer, it's hot, and we have been someplace actually where it's cool or cooler. It's in the southern hemisphere. This morning we're talking about Brazil.
Last week we didn't have morning view, and that was because we were down in Sao Paulo.
And we were rolling out a solution for the whole nation of Brazil with banks down there with our partner, Citi.
Right, and the first bank came online last week, Itaú.
Is that the way you say it? It's ITAU.
I have no idea.
Is that the Arizona pronunciation? All right. Well, so let's talk a little bit first about Brazil as a country, then their financial system, and we have to talk about the protests.
Well, yeah, it's
football. They call it football. Soccer is what it's called in America, but football.
Yeah, it's been interesting down in Brazil. Brazil was the economy that everybody wanted to emulate. It was growing at a fantastic rate. A couple of years ago, it was growing at about a 9% annual
minerals,
rate.
Lots of minerals, coal, oil and gas.
Major resources.
Gold.
They have a lot of exports as a result of that.
But GDP grew 7%. I mean, a couple of years ago, it grew 7%.
Yes, I know.
Amazing.
Yeah, and but now inflation has been under control. Back in the 80s, inflation reached a high of over 6,000%, and
wow.
They had a lot of problems.
It went up faster than the cost of higher education.
Oh man, it was rough. And so they put in a lot of controls. They got things straightened out, got the economy on a good footing. Things have been doing very, very well.
Privatized some of the industries.
Exactly. They've got a middle class that's been developing with expectations, and
in the major cities, a good mass transit system.
Right, and one of the reasons that we've gotten involved is that there's a lot of interest now in home ownership.
Which is a good thing.
Which is a good thing, and a lot of the middle class are looking to buy homes, and that's been growing at a rapid rate, but they don't have a lot of the infrastructure around mortgage that we have in the U.S., so they came to us and said, well, can you help us? And so we're doing that and gradually rolling out the banks in Brazil onto the same type of system we have here.
So let's talk a little about our solutions and our partner down there. Our partner down there, Citi, they have really two different businesses. They run the recording of basically all of the fixed income contracts,
Right.
And they also record all the vehicles, the vehicle ownership and the transfer of that ownership in the country.
Essentially the liens on the vehicles, right?
Exactly. And that's a very good business. They've been there for many years. They were part of the government and then they were privatized.
Right.
And so what they wanted to do is they wanted to help mortgage origination. They think home ownership is here to stay in Brazil. It's a good thing. And so to help mortgage origination, it's a credit number on the applicant and a collateral number on the property. And they want to build out the collateral space, including a national collateral database and some analytics. Could you talk a little about that and how you see that developing in Brazil?
Right. Well, one of the big challenges in Brazil is, unlike the U.S. In the U.S., we have tax assessors who basically keep track of the properties themselves so that they can collect taxes on them.
Right.
And then we have the county recorders who actually keep track of the ownership of the property. And anytime a transaction occurs, they record that. And between those two, that constitutes what we have in the U.S. is public record data. And it's available to the public through various aggregators who pull that data together. And we use that as part of our national collateral database. But that type of structure does not exist in Brazil. They have essentially notaries who record that information, but those are private businesses. And they have the responsibility for recording those ownerships and those transactions, but they don't make that data generally available. And so there is no basis from which to develop a national database. And so part of what we're trying to do there is to figure out ways to acquire some of that data to start building out a national database so we can have things like analytic products and price indices and those types of things on homeowners.
There was a lot of interest in price indices. Talk about some of the reasons that you would want a price index.
Well, when you record the price of anything, one of the things that people are concerned about are things like inflation, okay? And how much of our wealth resides in your home ownership? How big of a component is that of what's going on in the economy? It's a major impact, and much of the wealth in the U.S. is in their home ownership. You know, that's where people acquire wealth. They don't have a good way of tracking that. And the other thing is that when you're looking at large groups of loans, trying to understand the underlying support of those loans is very important, and you have to have some type of index to do that.
That will get more and more important as a secondary market continues to develop. Now, the secondary market in Brazil is in its very early stages. One of the things that we've had happen in this country is we've had the GSEs, Fannie Mae and Freddie Mac, two of the larger GSEs. And the things they brought to the table, they brought liquidity to the table, and they brought standardization of the forms to the table. Those are the two major things. So if a bank wants to liquefy their balance sheet, turn it into cash, they've got these loans they can sell. If it fits Fannie and Freddie criteria, they can sell to Fannie and Freddie.
Right.
Do you think it would help Brazil if they had an equivalent entity?
Perhaps down the road. Right now, they're using. There's a large pool of money that comes from the
savings pool.
Savings pool,
right,
that the government manages, and that is what's driving a lot of the money for the financing of the loans. And the government makes those loans out of that savings pool, and there's a big chunk of money, but that's expected to be used up in a few years. And when that happens, there's got to be some way for those lenders to liquefy their balance sheets, and that's when the secondary market is going to be really important.
So what would you do if you were Brazilian bankers or the Brazilian government? What would you do in terms of building out a secondary market? What kind of steps would you take? We obviously need some data, right?
Data is critical.
Absolutely.
And it just doesn't exist. Right?
Transparency, price discovery, all those sorts of things are based on a national collateral database.
Right.
And what else? What other kind of things you think they need? Some standardization of forms?
Standardization of forms, standardization
across banks.
Across all the banks, standardization of the processes that they're using for mortgage origination. They're going to have to implement some various types of regulatory laws around the mortgage process. Right now, because the demand is so high, it's sort of like a few years ago in the U.S., there are no bad loans.
Exactly. If you can fog a mirror, you need some money.
Right. And so right now, that's the way it is down there. But that's, things change. I mean, we're seeing change right now. All of a sudden, there's an article in the New York Times this weekend about a billionaire in Brazil.
He's got to refinance his tankers and the whole thing.
His wealth is just diminishing rapidly because the economy has turned a bit, and as it does, and that will happen in housing as well.
So what do you think? I mean, I hear all these about these protests and about the bus fare going from $3 to $3.20. What do you think about all that?
Well, it's interesting. I think that what we're seeing is a reaction of the public against some things of built-up frustration. The bus fare wasn't that big a thing, but in fact the government rescinded the bus fare, and the demonstrations are still going on. It was funny because they formed this little group to protest the bus fares, and they were expecting turnouts of maybe 5,000 to 10,000 people at best, you know. And they were getting hundreds of thousands, even millions of people turning out for these protests, totally unexpected. And I think it's a build-up frustration on a variety of things, particularly right now, the fact that the government is spending billions of dollars on the Olympics, preparing for the Olympics and preparing for the World Cup.
World Cup, right.
And they are frustrated because as we experience, there's a lot of infrastructure needs in the big cities that is just not currently being met.
And so the rationale is if they have the money to spend on the soccer stadiums, why don't they spend it on the infrastructure?
Exactly. And a lot of the things they're doing for the big events is really hard to justify. I saw a TV program when we were in Sao Paulo about the big stadium that they're building. They're doing big stadiums around the country in different places. One of them in the Amazon. And there's no way that there is any infrastructure or population or anything to support that stadium once the World Cup is over, and yet there's going to be this massive expenditure for that big stadium there.
Well, we're out of time. We'll talk more about Brazil in a future discussion. This is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. You all have a fantastic week.